Tyler, obviously big player in the new construction space, has had tons of success with luxury especially, and kind of wanted to pick his brain today on kind of his mindset and what kind of goes through the, like, not A to Z, but like really the big milestones along the way as we get to completing a deal, right?
Yeah.
And getting the project going. So I know we got some questions for him, so Mike, take it away.
Yeah, TB Winder, the name investors trust.
Look at that. Look at that.
Right? You like that? You like
That's it.
that? Come on, give me the ad reads. I could do this all day. Anyway,
Let's go. Hit it.
all right, Ty. So we're going to talk, I guess, my first question for you is your mindset or the prism that you're looking through when you're starting to first scout out potential projects that are upcoming. What are your bottlenecks that you're looking at? What are you looking at from like a financial perspective and make sense? And then general areas, like what's going on up there besides this stuff that can't be shown.
So I mean, the easiest thing right off the bat is trust your numbers. I mean, that's the most important thing at the end of the day. Don't start looking at, this house has good bones. It was built in 1876. You can do something fun with it. Like, trust your numbers first and let everything dictate off of that. If you're a new investor, you've been doing this 15 times over again, where you're purchasing is all going to be dictated around the amount of equity that you truly have. How much cash do you have at your disposal? And that's going to kind of dictate where you're going to be shopping. Like, if you sit there, it's like, all right, I have $100,000 of true equity that I can use. Then just work your numbers backwards. How much is the lender going to need for a down payment? They're going to fund their construction. How much can my $100,000 take me? In this day and age, it might only buy you a $325,000 acquisition. If you're in Eastern Massachusetts, you're not going to get anything. Yep. So it's like, all right, we got to get out further west, further north, further south. And then everything's going to dictate off of that. If you say, I have unlimited capital because I have, investors lined up to do whatever we want to do, then it's what kind of towns you can be very picky. What towns do I want to be in and what product do I want to go in? If you want to hit that luxury market, let's say in Metro West, like, and you want to dance like 6 million plus, or you go coastal, $7 million plus on the beach, like, you have to have significant capital ready to rock and roll. But then it's ultimately going to come down, what do your numbers look like? Trust your numbers, know what you have to play with, who's going to be able to fund it, and who's buying it on the backside.
Yeah. I guess that last piece, like do you start with kind of the buyer in mind of who you're going to sell to, as the end product?
You need to know who's gonna buy the product as you're creating it. So not necessarily, you're gonna base everything off your numbers. Yep. All right, I have $100,000. I'm gonna buy for $325 in Central Mass. Perfect. That means my exit is gonna be $500,000 for a single family. All right, who's buying a $500,000 single family in Worcester, Massachusetts right now? And then you base the demographics off of that. Because, like, if I have a family of 5 who's going to be buying this, what is a family of 5 going to be looking for in this particular market? And then it's like, do we need an extra bedroom up top, or can we get away with 3 larger ones, or do we need to squeeze in a 4th one? If I know it's a family of 5, do we have an au pair? Do we have in-laws coming through? I know I have to have a bedroom on the 1st floor. But again, that's after I am acquiring the property. It's under agreement. I'm working with the architect and my agent on who's going to be buying this on the backside, so I can prep it ahead of time. But again, that's step 2, because step 1, trust your numbers, know exactly what the numbers look like before I do anything.
Awesome.
So real quick question on you mentioned like some of the steps, right, Tyler? Like, do you already, like, when you talk about like going through the numbers, right? What do you actually, like, how do you determine your numbers? Like, what is your, like, do you have your own spreadsheet? Are there certain calculators online that you use? And does it vary? Like, does your thought process vary from deal to deal?
The baseline and the foundation of every deal is going to be whether I'm buying 500 units that I'm developing or a single family. Like, your foundation has to stay the same. And yes, there's a million different like calculators that you can go, online gurus you can do, but keep everything as simple as possible. The simplest that you can keep a deal, the better it's going to be for you at the back end. So when you say, what are my numbers? Most important number is, what am I going to sell it for on the backside? If I'm tearing it down, I'm going to sell something for $3 million. I need to know 3 million, because from that 3 million number, I know how much the bank is going to give me. I can then talk to my contractor. How much money do I actually need to build this house to sell for $3 million? And that's going to determine what I can pay for the property. Like, list price means absolutely nothing. If something's listed at $1.2 million, but the numbers tell me that I need to buy for 800, I put an offer in for 800. And if they say no, kick rocks, we'll say, all right, well, the numbers don't make sense. You're extremely you're way overpriced. No one's buying.
It is such a, it's funny how like approaching a deal can be a completely different mindset, but it is so easy with an investment property that you're looking to renovate versus somebody that, like, a family that needs a home and it's served for that particular purpose. There's way more emotion involved for this versus this. It's just like, you're just shooting a ton of shots and seeing if
you can't be emotional with it. I mean, my favorite deal that I never had, I still think about to this day, and I wanted to make it work so bad. It was It was 2 acres in Melrose that no matter what I did to the property was not going to sell for over $2 million, and I could have bought it for around 750. Old house, the most beautiful piece of property ever. I was emotional with that one. Stop, dude. I'm working here.
Dog.
Stop. But that's the one property that I was extremely emotional about, and I never bought it. And I still drive past like, man, I wish I would have got that. But at the end of the day, it was selling for no more than 2 million, no matter what I did to it, and I could not build it for cheap enough to be able to be below my numbers. I would have had to buy the most beautiful property in Metro West. I would bet against it for $500,000. That would never happen.
Yeah.
But my numbers are what numbers are. I get emotional about it. I go 750. That's when you're going to lose your ass. Like you're going to bury yourself
Yeah.
before you even get to final sign-offs.
And are you answering to a group of, is it the same consistent investors? Do you like raise a fund for a particular project? Like how does the acquisition of the money happen?
So I did start a fund in the middle of COVID. We just did our second fund raise or second fund launch, let's call it. It's full discretionary. So I have a handful of investors that just throw me money and I do whatever I want with it. It's great on this side because you have full flexibility to be able to manufacture deals however you want to.
Mm-hmm.
Majority of the time, it's I lock something up. I know my numbers inside and out. I lock it up with the offer. I lock it up at purchase and sale. But as soon as I get that signed offer, I put all my numbers together. I put a pro forma together, all the comps and all the high level, everything you need to know about the property. And I blast it out to my investors and say, hey, I'm raising X amount of money. Here's all the numbers. Here's everything. Let me know your thoughts. I'm signing purchase and sale in 5 days, and I'm closing this in 3 weeks.
And then they're willing to put in a certain percentage of that particular deal.
Usually,
Is it like
yeah.
first
Like
come,
let's
first
say,
serve?
let's say like keeping everything super simple. If I were to buy a piece of property for $1 million, build for $1 million, sell for $3 million. Let's use that as a
Mm-hmm.
baseline. That equity raise, depending on how it's structured with contractors, it might be anywhere between a $400,000 and a $500,000 raise, depending on debt and how everything is structured. So if I raise $500,000, buy for $1 million, build for $1 million, sell for $3 million, raise 500. What is that 500? You set up the parameters. I try to get my investors 30% on paper. There's upside, there's downsides, but if I'm basing everything off of investors getting 30%, if the deal goes sideways, if it goes great, at least you have so much flexibility to get everyone protected. So that and everyone raises it different. I know developers who can raise capital at 16% equity, grand slam. If you can do that, you're going to make a lot of money in this industry if you have
Yeah.
everything set. If not, you're going to have to give up more equity, but the more equity you have, the more projects you can get, the better projects you can get, the better markets you can get into. Because
Mm-hmm.
especially construction now, it's so expensive. It's so expensive to build. So how many times I look at any builder who's building outside of like the 128 belt and say, I don't know how you're making money because a 4x4 is still a 4x4.
Right.
The appliances are still appliances. Like the base is still the base. I don't know how you're making money only selling a new construction for $1 million. If you give me a land for free and say go build a 3,000 square foot house and sell for $1 million, I can't do it and make money.
Right. Right. So
What?
how do you? So you talked about like you sent an email out saying like I'm signing the person to sale in 5 days. Here's the close date, and you obviously are sending that email out after an offer is accepted, right?
Of course.
So like if so, how quickly from sending that email out, like are you able to gather the funds for like one of these projects? Like is that a lot of risk you're taking on in those situations? And naturally, yeah, the answer is yes, right? But
For sure.
like what does that look like, and what's the mindset there?
Yeah, I mean, it's all based around the confidence and how confident I am with my numbers, and
Yeah.
everything is going to dictate off that. Like my second deal that I ever did as a true, or I guess third deal I did as a true sponsor, I had $50,000 in my name, and I put $50,000 down at purchase and sale with no investors committed or even interested. Like you're all in on a blackjack table. Hi, bud.
That
So you put
got me going a little
you
bit.
put 50,000 down at purchase and sale. Hey, this is either going to work out or it's not going to work out.
Yeah.
But I hope my investors see the way I see, and they did. We closed it. You get the 50 back, and you close as a commission. You get some back. Like it all works out.
Did you use
And then
your dog as collateral?
never.
Okay. All right.
But then the best deal in my mind that I ever locked up was a new construction 2-unit approved project in Cambridge. And luckily, I locked it up for $10,000 down at PNS. So in the event it backs out, at least I'm still walking forward. I'm not shelling out $100,000 and walking away from it.
Mm-hmm.
I didn't have a single investor like it. It took me 2.5 weeks of blasting it out, multiple emails, sending it out. I didn't have one of my previous investors like the deal and commit a single penny. And I ended up wholesaling it. The second I opened up the wholesale market, everyone was scrapping at the bit to try to get it for a healthy assignment fee. But my investors didn't like it. It's the best deal on paper that I ever bought.
Can you explain for just an average person watching, like, what a wholesale is and how if you're buying something and then you can immediately sell it, like, what are the improvements made and what does that process look like?
Typically in real estate, a wholesale, or you'll see an assignment. Wholesale assignment are going to be the same thing. And essentially what you're doing is you're assigning the right to purchase the purchase and sale agreement that I have. So if I'm going to buy your house from you for $500,000, I sign purchase and sale, close in 30 days. And somebody comes to me and says, hey, I really like that house. I'll give you $510,000 for it. Essentially, I can sell them the rights to my $500,000 purchase and sale for $10,000 extra. So do you see it in like traditional real estate as a first-time home buyer buying it? No. Investment world, you see it all the time.
Yeah.
But if you're going conventional financing with the bank, they need to know up front if it's an assignment deal or wholesale, because that can't be on the HUD. And if you're going private, it's different because it's, hard money, not wild, wild west, but a lot less scrutinized. Yeah. So you just have to be very careful where you're buying it. If there's an assignment fee, the bank needs to know about it from day one, because if not, you need to raise or bring that extra money to the table to be able to pay for the assignment.
Understood.
I think the trust the numbers piece, and Mike, you were saying this earlier, like, like when you're buying it, your mindset's different when you're buying it as an investment and you're renovating. Even if you're not renovating, right? Buying as an investment, because that's my background, is buy and hold, right? I do not have the experience Tyler has with building and what have you, but he's 100% right. It comes down to the numbers. You cannot get emotional. You have to think about it as a business, right? You're not thinking about like your family living there or the memory you're going to create and all that kind of stuff. That stuff doesn't matter. So yeah, I think it's really interesting though. But like even that wholesale idea that Tyler was talking about, you probably have to kind of like have that as a like a what if, right? Like you have to kind of like have that in your calculus in case things go that way, and you send that email out to investors, and like Tyler mentioned, sometimes people will not be interested, and then you have to have an out. So you have to think about that. That makes sense.
Yeah, and the whole thing with wholesaling as well, like, go sign up for any of the like Facebook investor groups or all the wholesalers out there. Put your name on the list and watch the deals that they send. It is very rare to see a wholesaler who truly knows the development game and the number game. Like, if you have a deal under contract, you should send it to me right off the bat. And at the bare minimum, we'll run all the numbers. We'll set up the assignment the correct way in terms of how to present it to an investor. And you're going to have a 100% success rate, rather than, which unfortunately so many of us real estate agents do. Great deal comes. I have an investor who wants to go buy to develop. Something came up. I'm going to send it to him with nothing else. All you're doing is shooting yourself in the foot. We're way too busy to go do your work and expect to get a commission. Do the work up front. Tell me everything about the project and then present it to me. You're going to have so much more success at the end of the day, because A, you're doing your work, you're showing your value, you're going to show what needs to be built, what it's going to be selling for. Does this work for you? But to Saad's point, it's like, you have to know your numbers up front, whether you're going to buy and hold, whether you're going to buy, renovate, and sell, buy, renovate, sell, and keep, or you're just going to sign it right off the bat. If you lock up a deal the right way, you should have 3 to 4 exits day one.
Yeah.
And that's the sign of a good deal.
That's good intel.
So how long does it take for you to do all that analysis and get those numbers together? Obviously you have a lot of experience with this, so you can do it probably a lot faster than others, but still it's a process. So like what is that point for you identify a deal, now you're prepped with the deal, you have all your numbers, now you're taking it to market, whether it's to your investors or wholesaling or what have you.
You're saying how quick can I get it like on paper to be able to present?
Like how quick can you know your numbers, I guess? Yeah.
I mean, I do this multiple times every day for years. Like, it's my wheelhouse. But I mean, if you send me a deal right now and say, what's your thoughts on it? And I'm in front of the computer, I can tell you within 7 minutes if it's something we're going to pursue or take it to the next step. Hey, the numbers work. Let's go to the next step. What's the next step? Then it's identifying, how's the street? Are there easements? Am I next to a train station? Am I next to a gas station? Is there any weird particular zoning things we have to go through? If all those answers check, numbers check, cool. Phase 2, check, cool. I'm going to be there tomorrow at 10 o'clock in the morning. Get ready to put an offer in, because the only reason I'm not going to put an offer in is if I get there and there's something that I could not see on the computer.
Yeah.
Right.
But you should be able to know your numbers very, very quickly, because it's identifying what's the best use of the property, tear down, fix and flip, add in a unit, addition off the back, whatever it is. You should be able to identify that very quickly just by looking at comps. What's the highest comps that sold? That's a similar lot to mine, and then start working backwards. You'll be able to find that right off the bat.
And how many deals, like what percentage of deals that you come across do you actually end up pursuing?
When we're clicking, when I'm really clicking, I'm usually putting in 2 to 3 offers a week.
Okay.
How many off like, and it doesn't get to offer unless I know everything else. Like, I hate wasting time on it. I'll tell again, you send me a deal, I'll tell you within 5 minutes if it's something I want to pursue or not.
Mhm.
Every property is a deal depending on what you can buy it for. So again, something's
Right.
listed for $1 million.
Well put.
That's
Yeah.
great. Your $1 million listing looks great. I'll pay 500 for it. Like, I gave an offer yesterday that was 50% of what they were asking for. I don't care if you like it or not, but the numbers aren't going to change.
Mhm.
And if you bring it to anybody else, they're going to look at it exactly the same way. If they like the deal better because they live in the neighborhood, that's where you start getting emotional. Yeah, it goes up a little bit, but
Mhm.
numbers are numbers.
Yep.
So I don't know, probably one out of every, like, maybe 1 out of every 15 deals that I put an offer in gets to true negotiations or accepted. But I'm
Got
not
it.
blasting out 75 offers because we don't have time for that.
Yeah.
Yep. Smart.
Yeah. And how many deals are you doing a year?
I usually have between like 4 and 7 projects going on at once.
Got it. Got it.
Awesome.
All in greater.
All in Greater Boston. Yeah. Right now, the furthest west I am from Boston is Wayland. But Wayland, Wellesley, Needham, Lexington, Somerville, Boston. That's what we have right now.
And for other folks that might be interested in, like, maybe they don't want to purchase their own deals, they don't know how to flip themselves or what have you, they might want to maybe, Tyler, invest with you or something like that. Like, what does that process look like? And number one, can they, or do you have like a closed list of investors? And number two, like, what would it look like in terms of minimum investment? Do they have to be accredited? All that kind of stuff.
It gets, this is where everything gets dicey. So like in the fund world, I had an SEC attorney draft up everything. It's
Yeah.
very soup to nuts, hundreds of paperwork that you have to like sign and figure out and make sure you're accredited and all of that. In true individual property, buy a property, single owned entity, LLC, purchases the property, gets the loan, builds it and sells it. You can pretty much get it from anybody. And you kind of say that with a little bit of like, because if you're investing $20,000 and you have $25,000 to your name, don't do it. Like, you
Yeah.
have to have, like,
Right.
that's the last thing in the world you want to have as an operator, is someone who's texting you every week. Hey,
Yeah.
what's going on? Like,
Just
you have the last
nervous about
funds.
it.
It's like, do you understand the risk and the time frame with it?
Yeah.
Like, back off.
Yeah.
But at the same time, you have that kind of flexibility. Like, your first deal you're probably ever going to use that you raise money is going to be friends and family. Hey guys, I found this contractor. He wants to work with me. I found a property. I've ran the numbers. I talked to you guys. You guys showed me what all the numbers look like. We have it all set. I'm signing purchase and sale. I need to raise money for down payment. I'm willing to pay you this, but I need help acquiring this. Would you be interested in working with me? Because to your point, so many people want to flip a home.
Yeah.
HGTV has 50 shows on right now
Mhm.
about flipping homes,
Yeah.
flipping Chicago, flipping LA, whatever it is. But unless you're like in the business and this is your full-time gig, it is very, very difficult. So there's not a lot of options to do a project if you don't have the time. So it's like, partner with someone like myself, like, hey, I've got some funds, send me your next deal. Because then you can, I mean, it's a single property and you can feel it, touch it, watch it grow, see how it does on the market, walk through open houses and be like, I'm a part of this, without swinging hammers and dealing with all the shit that we have to go through as developers.
So speaking of swing hammers, I mean, like, you talk about you need to have a team, you need to have time. You also need to have a team, right? So you probably have trusted, not just trusted lenders and attorneys and what have you, but you probably have, your whole list of like contractors and HVAC guy, electrician, handyman, but more than handyman, like full on GC and all that kind of stuff. Like, how long did it take you to build your like team, like your full on team, to give yourself credibility and confidence to go out to the market the way you do?
Well, the very first deal I did, like, I kind of worked into the business backwards. Like, the very first deal I ever did was a $4 million spec home in Weston. And that's what opened up the whole world of hard money lending, acquisitions. What is the bank going to offer? What's an LTV? So I started working backwards off that. The people I worked for, their entire portfolio got wiped out. So I learned what not to do. So the first deal I ever did was a single family flip in Holliston. I think I lost like 27 grand on it at the end of the day, but I project managed it. I had to go, pay for the porta potty to get over. I had to meet the plumber. Like, I had to run it and trust that I know how to actually finish a project. Once it was that, it's all right. Let's get a GC involved, because I don't want to be on site every day swinging hammers. I'm not a contractor by trade. I don't have that
Right.
expertise like everybody else has. My contractor that I use, he's been in the business for 40 plus years. He's seen everything, built everything from $10 million condos to apartment buildings, do you name it. I can bring a project. I know the numbers. Do these numbers work for you? They say, yes, we go for it. So how long did it take me to build it up? Like, there's still so many subs that I do not have a laundry list of, because I've been playing the developer card versus the general contracting card. Like, the general contracting business, you cannot take it lightly. It is a brutal, brutal business. Dude, I am working. Stop on it. Panic. It is a brutal business, like from making sure that every sub is insured,
Mm-hmm.
all of the stuff besides actually doing the work. It's a brutal business that, quite frankly, I don't want to be a part of. So many developers go the general contracting route, but trying to lock up somebody to do like a custom build, or there's good cash flow to be able to renovate a bathroom, so they're getting cash flow because developing, you get paid upon the sale. You might not get paid for 12 months, 16 months, 2 years, whatever it is.
Right.
It's tough. You got to be able to withstand it. But you think that you're going to save money because you're going to do it all yourself and manage everything. But it's so time intensive to gather everyone, to make sure everything is doing it right. Like, how much time you're investing in before that first swing of the hammer is brutal. So if you have a GC company, they're worth their weight in gold having a good GC because of all the shit you don't have to worry about.
Mm-hmm.
And then us as investors, we can go focus on the stuff that makes us money. And what is that? Running our numbers, putting out offers, buying properties, lining up the financing, lining up the agents to sell it, and trying to put a good team together.
I think that's
Mm-hmm.
really, really good insight for anyone listening, is that whole point about a GC. Like, so many people try to build their own team and think they need to know one person to do this, one person to do that. And sometimes it's helpful, right, for one-off jobs and things like that. But like for projects like this, like what Tyler's talking about and what Tyler's done, like time is money, right? And also it's like not just money. Like you save that time, you don't have to deal with that headache. That's good for you. It's better for your mental health, right? Like it's a lot of work, and I think if you're trying to go down this path, even if you're not, if you just someone a good contact to have for just whatever you own right now is a GC, a good
Yeah.
GC, somebody who knows what the hell they're doing and has good connections to like people who are licensed, insured, and just generally just do a good job.
Well, and I mean, you kind of look at it like if you go talk to 50 developers, from people who've been doing it for 1 year, people who've been doing it for 40 years, truly playing development, like you can make millions and millions of dollars. You can lose everything. Like it is life's game of blackjack. Second blackjack reference today. How about that? But it's life's version of like true gambling and going to the casino
Yeah.
is buying a property to do this. If anything goes wrong, you can get wiped out very quickly. So like you'll meet developers who are billionaires that have gone bankrupt multiple times because that's just the risk of the game.
Mm-hmm.
So it's like having a good GC that can take all of that off your shoulder, and then we can focus on the important things as a developer. Having steady cash, having equity, having backing, having all the agent connections, having the next best deal. Because if you do one deal, do it successfully, don't shop for anything, it's going to take you 3 years to do what you could have been building if you had the right team.
Right.
And also, to Scott's point, time is money. There are serious implications if you don't do work for a month, and these price points where interest rates are at right now, you are kissing tens of thousands of dollars goodbye every month going to the bank.
Mm-hmm.
And if you don't pay it, you're screwed. So like, is it worth paying extra, having a GC who can move quick, who can handle everything, who takes the stress off of your shoulders all day long? It's just, can you make the numbers
Yeah.
work? And that's where I say, if you give me a land for free and say build a 3,000 square foot single family sell for $1 million, I couldn't do it because I have to make sure my GC is making money on it. And after everything's said and done, commissions, interest, insurance, tax stamps, there might not be any money for me at the end. And that is working on a free lot. So there's very specific towns I can work in, and a lot of towns I can't, because I know what the base number is to buy and the end number is to sell, because the cost of construction is always the same cost of construction.
Yeah.
And I know where
Yeah.
Mike. Sorry.
Yeah. Just one question off of that is what is a cost that maybe people is unexpectedly high to like an average consumer, like that they wouldn't know about? Like, is it permitting costs or anything else involved in the actual build?
This honestly, the scariest stuff right now is before you even start seeing the actual product. Not in like entitlement permits and stuff like that. That is what it is. But the roughs, like going in, and if you have a 3,000 square foot house that you're doing brand new electric, plumbing, HVAC, insulation, I mean, you're spending $150,000 just off those four trades in this house. That
Mm-hmm.
does nothing for the end value. You just have to have it. Like,
Yeah.
cost of copper is through the roof. Like, plumbers are extremely expensive right now.
Thank you for that. Yeah.
So we're I'm installing an electric charger right now, right outside. I mean, I'm not doing it, but I have the electrician who came in and they started the process yesterday. He was saying, he's like, yeah, because of everything that's been going on and just like the cost to install a charger, especially if you're just getting like those thicker wires. He's like, it's like double the cost than 2 years ago. So I mean, like, I think this just goes to your point that number one, time is money, but two, like in those situations, you don't have people who don't. If you don't have people that can move quickly and know what they're doing, it's going to cost you, like, especially when you do it at scale,
Mm-hmm.
Right.
it's going to cost you more and more and more. I mean, we see this with new developments, right? Like these these condo buildings, like there was one in East Boston, Mike, you and I have talked about, like they were underwater real fast because instead of closing in the 4 months, 5 months after they had mentioned, it was again a new construction condo, or condo building, it took 2 years. So they were way underwater, and I don't know how much money they lost. They must have lost, like, to the tune of like $5-6 million on that project, just because of how long and it was because of an issue with their construction company.
Yeah.
So,
well, because you think about as a getting a construction loan, the bank doesn't give you all. If you have a $2 million budget from acquisition and construction, they don't give you the full 2 million.
Mm-hmm.
It's a draw process. So as I do 100,000 of foundation, then the bank releases 100,000. So if you're going to have delays or issues, do it before you even start going into that construction budget, because that is the cheapest point of the project where your money is actually going to be the least expensive. If you have delays on the very end where it's just not selling, that's where, like, if you overprice it and it sits on the market, tens of, like, that's your highest interest rate, or based off like how much money you actually have in play.
Yeah.
Versus if you have it all at the beginning, it's like, hey, it took 3 months to get this set. At least I'm only paying X amount versus 3 months on the backside where the total amount is double.
We do have a question from the audience. Can you talk about a path to finding a good GC, tips on not getting screwed? So maybe what kind of shyster behavior should we be on the lookout for?
I mean, references is everything. Any new GC you're talking to, get a list of references. I'd love to see references from a bank as well, because that's going to be, everything is going to be focalized off the bank. So good references. Know the past projects that they've actually done and verify that they did the work on them. What was their time frame to actually do it? Like, you have to have a lot of back end research. And I know this the hardest way, because I very initially trusted a GC who did a lot in the 90s, was getting back into it, and didn't know what the hell he was talking about. Had a track record on paper of
he missed Y2K.
Yeah, hundreds of units that he quote unquote developed that never happened. And you had to learn the hard way when the bank goes and seizes all the property. So I guess the easiest thing is really get your references. Try to get references with a bank as well. That's going to be huge. Verify past projects where you can verify how long the project took, and did they stay under budget. And get, dude, working here.
We're gonna let you go to him in a second.
Guys,
but yeah, keep going.
Killing me. Come on, dude. You want to those are key. And then it's knowing their processes up front. Like, hey, if I'm funding you to get started with the subs, how much realistically do you need? Do you have the capital as a GC company to be able to stay ahead of construction? So if they don't, it's not the end of the world, but you just have to know that ahead of time, that if I'm sending you $100,000 before the bank's reimbursing me, I need to know that for my raise or my equity launch, versus, hey, you're very well funded, please verify it. And then I need to know how your draw process looks so we can stay ahead. So it's just continuing to ask questions, kind of like a first date. Just keep asking questions just to learn a little bit more about who you're getting into bed with.
So, what other question?
Go ahead. Yeah.
So,
should we plug your dating profile?
Yeah. Hinge Live.
Do you think, like, does the GC like own a part of the deal?
There's a lot of ways to structure it. So if you want to, like it's like creative financing. Like, if you give me a deal, guy owns no mortgage on it and is interested in the process, we can structure 75 deals in front of a whiteboard in an hour about how we want to buy this and make it work. So I've done deals. The deals I've protected myself the most, I make the least, but I know I'm protecting myself. Bringing the GC in, build it at cost. It's going to keep our break-even numbers drastically lower, and then we all get a piece of the profit on the backside. That's the easiest way to kind of protect yourself. Hey, build it at cost. We all get paid on the backside after we sell. So once you get good, all that is going to prevent you from making as much money as possible. But again, the risk is going to be higher as well. Because then what you're doing, if the GC is charging, let's say 20% on top of all the costs, and that's his fee, you need to make sure that the numbers support 20% above. Like, when you go bring it to the bank, does it support that extra 20% cost? If it does, it doesn't make sense to give up your equity, because you're going to make more on the backside. But if it's new GC, it's a great way to get in with them right off the bat, because him or her, it's a great way to get in with them right off the bat, because it's going to keep their skin in the game. They're incentivized to build it quicker, cheaper, and get it on the market and sold. If it's just cost, unfortunately, what is actually keeping them engaged to be able to finish this as quick as possible, unless you set up incentives. So developer 101 class, You buy it, you retain 100% equity. Your GC builds in all of their costs with their budget. And if they're completely over budget, that's on them. If they're under budget, that's on them as well. Number two, partner with the GC. They do it at cost. Make sure you verify all the costs, and you have some sort of a profit split on the backside.
Love it. This was awesome, Tyler.
It's good energy in here, baby.
I love
my
it.
dog
I love
wasn't.
it.
It's real nice.